This is coming from a feasibility scoping study that we have been undertaking in Ghana for the past few months in terms of where the opportunities lies for the Ghanaian market to develop its capital markets and specifically green bonds issuances in the country. We as FSD Africa have done other previous workshops, physical workshop before the COVID time in Ghana. So this is an additional webinar which is now going to be giving more information in terms of which sectors there will be potential opportunities for green bond issuances, including giving some ideas on the public sector. So I would like to go to the next slide and just give an overview of the agenda that we are going to follow. So we'll have an introduction and overview, which currently I'm doing. Then we'll have the main presentation on the green bonds in Ghana and how the market looks like. This will be led by Gaia and Igosime Oyofo from Lions Head Global Partners. We'll have a session on feedback, any questions and answers. So that will be taken through by, of course, the participants and the main presenters. And then we'll have our closing remarks, which will be given by David Ogbarma Tete, who is the Director General at SEC Ghana. So I will introduce the main speakers for this webinar. So David Tete, who is the Director General at SEC Ghana. Some of you might be already knowing him. He's the chairman at the West Africa Securities Regulator Association. He's previously worked at DataBank Group, and he's quite well known and regarded in the Ghanaian capital market space. Gaia Batista, she is the executive director at Lions Head Global Partners. She's the head of sustainable and impact finance. Previously, she's worked at Vivid Economics and Goldman Sachs. So she will also be one of our main presenters. Then we have Igosime Oyofo, who is also an executive director at Lions Head Global Partners. He is a capital markets and mergers and acquisitions expert. Previously at the African Leadership University and Chapel Hill, Denham. And myself, maybe most of you might have already met me physically. So I work at FSD Africa, mainly doing capital markets and development work for Africa. And I'm passionate about green and sustainable finance for the African markets. So just to take you through the contents of today's webinar, this is a build-up from what we have done physically. So part of it is basically a reminder on what we have done as FSD Africa in the Ghanaian market. So some of the key aspects or contents of this webinar will be what a green bond is, what is the issuance process involved in the green bond, some of the African green bond issuances which have happened, and some of them which are still ongoing, and how the green bond market again is in the emerging market space. Then we can come to the main aspect of this is how green bonds are viable for the Ghanaian market. This would be based on our feasibility and scoping study that we have carried out in Ghana and are still going. So we would very much appreciate your feedback on that, because that can be incorporated into the study that is being worked on, and it will be finalized hopefully by next month. And also the last item will be how we can create a conducive regulatory and issuance environment. As some of you might be aware, Ghana had a lot of activities not so good happening in the last 2 years. You had defaults happening in the market, and some of the fund managers, their license were also not renewed. So this will be a very good forum to see why the green bond market will be more better when it comes to corporate debt, because it has more governance and transparency that it offers compared to a conventional bond. So thank you very much for that brief introduction and overview. I will now like to hand over to Gaia Batista, who will be taking us through the main presentation together with Igosime Yofo. So Gaia, over to you.
Great, thank you so much, Vimal, for that introduction, and for all the work you guys have done in this space. As Vimal said, the part of what we would like to see out of this workshop is really participation from yourselves, from the audience, and getting some feedback on sort of some of the uses of proceeds, some of the things that we talk about, the viability for green bonds in Ghana. So very much looking forward to the Q&A as well. But with that, let's get started. So as Vimal said, we'll do a quick refresher on green bonds. I know you probably all are familiar with this, but just in case. So what is a green bond? Green bonds are normal debt instruments where the proceeds are earmarked and meant to be used specifically for eligible green uses. So the use of proceeds need to be aligned with environmentally beneficial or otherwise climate mitigation or adaptation projects. And these can be new projects, new uses of capital, or to refinance something that is green that you've done in the past. It is important to note that with green bonds, you have to define this use of proceeds and declare it upfront when you're before you're issuing the bond. But otherwise, the bonds in themselves, the structure, the credit side of the bond is exactly the same as a normal bond. So there is no credit difference between a green bond and another bond issued by the same issuer. So you could do a green senior unsecured bond, or you could do a green securitization, and those would be fundamentally the same from a credit and risk perspective. So how do you label a bond green? What do you use? There are three main reference standards in the market which allow you to call your bond green. The first is the Green Bond Principles. These are the oldest reference standards in the market and arguably the ones that have been used the most. They are relatively high level, but they give a good sense of both what these eligible uses of proceeds are, so what can you finance that is green, but also sort of the broader approach to issuing a green bond. So the steps you have to go through and the source of documentation you need to put together to issue a green bond. And we'll talk about that in a second. The second is the Climate Bond Standard. This was put together by the Climate Bonds Institute, an NGO very active in this space. And they essentially took the Green Bond Principles to a degree and sort of elaborated on them and developed them. So where the Green Bond Principles are quite high level in the level of detail they go into with regards to the eligible activities, the Climate Bond Standards really delves deep into the details and is much more prescriptive in terms of the standards you need to meet in order to be eligible to issue this bond. And you can obtain a certification to show that you're aligned with the Climate Bond Standards. And the last standard is the EU Green Bond Standard. This is still being developed by the EU, but they issued a taxonomy last year, which essentially details out what the EU believes to be green activities. And so we will see the standard come to market. They are all broadly aligned. They just are more or less detailed and go into more or less quantitative detail, for example. So where the Green Bond Principles might say green buildings are eligible as an activity to finance through a green bond, the Climate Bond Standards will take that a step further and say, yes, but they need to meet these particular thresholds. So that's sort of the relationship between these different standards. We've listed here some high-level uses of proceeds which are eligible. We'll go into more detail on these in the context of Ghana a little bit later, but things like renewable energy and energy efficiency, green buildings, water infrastructure, so being blue infrastructure essentially, pollution prevention and control, so things like the waste management, land use, sustainable land use. This is very important and something we're going to see a little bit more of, I think, in the next few years. So sustainable forestry, sustainable agriculture. And then also an ocean economy can be financed through a green bond, so sustainable fishing and fisheries management. And then lastly, things like green and low carbon transport. So how do you actually go about issuing one of these bonds? Here we're just going to go through sort of the process very quickly. So the first activity you really need to engage in is looking at your business, looking at the projects you finance, or perhaps your actual core business, and understanding where that fits within the green landscape. So you must identify eligible activities and expenditures within your business that could be financed through a green bond. That can seem like a daunting task, and there are advisors out there who can help you sort of navigate this entire process, but also sort of looking through your portfolio or looking through your activities. So we at Lionshead do that with our clients, but there are many others out there as well. And then always engagement with your treasury team. They should be on board with the issuance of a green bond. The second step is drafting a framework. So when you issue a green bond, as I said, you have to demonstrate upfront that the uses of proceeds of the bond are green and they are aligned with some of the standards we just looked at. So you do this by putting together a framework. This is usually a 4 to 12-page document, depending on how involved you want to be and how complex your portfolio is. And really, it needs to explain to investors, firstly, how you're going to use the proceeds of the bond. So, for example, if you want to finance green buildings, you need to explain that in there and show that these green buildings is an eligible category under the green bond principles of climate bond standards. Then you have to explain how you select projects to include in the bond. So do you have a committee that sits once a quarter and says, right, this project is in green building, so we are going to finance it through the issuance of a green bond? Then how you're going to manage your proceeds through your internal systems. So your ability to track, if you issue 100 million green bond, then you need to be able to track that through your internal processes to show that an equivalent amount of money has been allocated to these eligible activities. And finally, reporting. This is quite important. Green bond investors like to know how the capital has been used, how it's been allocated, and the impact of that capital. So if you're financing renewable energy, they'd like to know to what projects it's been allocated, and also the amount of energy produced, and so the amount of carbon emissions that may have been avoided through that activity. And finally, the second party opinion. So investors and generally the market expects you to receive an independent assurance that your framework is in line with the standards available globally. So this is just good housekeeping, having somebody independent come in and say, like, right, yes, this issuer, their bond is credible, it does what it says on the tin, and we believe they're aligned with the green bond principles or the climate bond standards. And lastly, investor engagement. Now, we put this here at the end, but the reality is that you would want to do this throughout the process. So engaging with your existing investors on what you're working on to get them bought in and make sure they're interested and supportive, but also through your advisors, reaching out to new investors who may not have been interested in your bonds before, but by virtue of you issuing a green bond may now be interested in purchasing that debt. So That is very, very important to do throughout the whole process. And then here we provided you with some idea of what the ecosystem for issuing a green bond is. So here we have the reference bodies and standards, the second party opinion providers, and then sort of advisors, bond managers, underwriters. So that's a quick overview of how to get one of these done. So onwards to green bonds in Africa. So what is the landscape like here? We have seen a fair amount of green bond issuances since 2017. It has been a little bit more muted and a little bit slower than other emerging regions. However, we are seeing interest pick up, particularly in two countries, Nigeria and South Africa. There's a growing interest in labeled debt more broadly, so green, but also social bonds and sustainability bonds. So what I wanted to do is quickly just pick out a couple of examples to give an idea of what kind of bonds have been issued before on the continent. So Morocco had a real sort of burst of issuance a few years ago and has gone a little bit more quiet now, but bonds there have financed primarily renewable energy and have been issued by both energy bodies, but also the banks and green buildings, particularly in Casablanca. In Nigeria, we saw the first sovereign green bonds come to market, as well as the Axis Bank bond and NS Power. So NS Power was a green bond issued to finance a retrofit and upgrade of a hydropower plant. So very important. In South Africa, I mentioned this is a very active market. So we've seen a bank come to market with two bonds. The city of Cape Town was the first issuer, first proper issuer in South Africa. And then Growth Point, a commercial real estate entity, issued some bonds to finance a Green Star rated building, so green buildings. And then I wanted to mention Kenya. In Kenya, we saw a bond by a student accommodation provider for green student housing. The debt capital markets in Kenya have been a little slow for the past few years, following a few difficult defaults and some rates action. So this bond received some support, and I think it's a good indication of the support that can be available to issuers internationally from the DFI community. So FSD Africa, our host, I believe, provided technical assistance, whereas others provided anchor investment and the guarantee to help get the market started and see some issuance in Kenya. So there is a strong interest in developing this space more broadly. So what about the investor interest in emerging markets and general emerging markets green bond landscape? Broadly, Europe remains the biggest green and labeled debt market, where demand from investors significantly outstrips supply. However, we're seeing issuance pick up across the globe, including in emerging markets. And you can see here, China has sort of gone crazy off the charts. China, interestingly, had their own definition of a green bond for a while, which wasn't quite aligned with the global definitions, but that has been revised and now is much more in line with, for example, the green bond principles and the common bond standards. But we are seeing a lot of issuance, a lot of interest, even in more exotic instruments like green sukuks. And broadly, the main issuers in these markets tend to be parastatals and financial institutions. So financial institutions make up a large amount of the issuers in emerging markets. On the investor side, we're seeing a growing number of EM-focused green bond funds. These are driven by two things. One is DFI-backed initiatives, so where For example, the IFC has a risk sharing agreement with a large asset manager, and so they have put together a large fund focusing, for example, fixed income, a financial institution green bonds in emerging markets, or sovereign green bonds in emerging markets, or real economy green bonds in emerging markets. And secondly, there is a need for yield. So in Europe and North America, the yield landscape is very low, and so investors are increasingly looking to take on a bit of risk for yield. So that's a factor in all of this. Now, the majority of international investors with a green bond mandate who are able to look at emerging markets will be looking for hard currency, which makes this a little bit trickier for smaller issuers in emerging markets. And so tapping local market interest, local pension funds, local asset managers is very, very important in order to develop a local currency green bond market. And so it's, whilst there is increasing interest, it needs to be also supported at home by the local investors. So moving on to green bonds specifically in Ghana. So we did, as Vimal said, we did some work trying to understand the viability and the potential for green bonds in Ghana, and spoke to, I think, a large number of people on this call probably. So here we've summarized sort of our view and what we think is possible. So it's very interesting, the alignment between green bond eligible activities and sort of Ghana's priority sectors, and Ghana's nationally determined contributions. So Ghana's NDCs. These are the targets and the activities Ghana has set itself to reduce its emissions. So Ghana needs about $22.6 billion of finance to meet its NDCs, to finance these emission reduction activities and climate adaptation and mitigation activities. And there is a strong overlap between those activities and what can be financed by a green bond. And these span really the public sector spend and private sector spend. So green bonds could really be a very important tool for Ghana to not only sort of pivot towards a green and sustainable economy, but also sort of to go beyond aid, which is one of the key targets of, at national level. So here we've highlighted a few sectors and a few areas where there's a really strong overlap, we think, and from what we've spoken about with stakeholders, with yourselves, in the market. So what are some of these? Waste, water, and water infrastructure here on the top left. Water treatment plants and water and sewage infrastructure. There is a need for greater investment in this space in Ghana, and this is something that could be very much financed through green bond issuance, whether it is government expenditure, so public sector, or private sector investment. Both would meet a need locally, but also be aligned with a green bond framework. Green buildings, we talked about this, sort of the Growth Point bond in South Africa. There is a big housing deficit in Ghana, residential housing deficit. Could this be filled using green housing, so energy efficient housing, which has lower running costs for purchasers and for homeowners? Could we pivot all new builds to be green and energy efficient? And so issue not only green mortgages, but also loans to housing developers that are green, and then refinance those through a green bond. Climate change adaptation, things like resilient infrastructure and coastal defense infrastructure, but also smart agriculture to adapt to a changing climate. These things can be financed through a green bond and could be included were they to be priority spent by the government in a sovereign issuance. Clean transportation, so electric rail, low carbon mass transport. These are all things that are relevant to Ghana and also eligible under green bonds. Natural resource and land use. This is one that's a little bit trickier perhaps to finance, but given the huge cocoa sector in Ghana, this could be something very, very interesting, perhaps more so at government level, but perhaps also at private sector level. So shifting to sustainable agricultural practices, having conservation corridors and reforestation, that could all be financed through a green bond that focuses on natural resources and land use. Then back to the same theme as sort of the wastewater management, waste collection and disposal. Again, in urban areas, this could be something that is financed through a green bond. And lastly, renewable energy. Whilst there is a lot of capacity available for urban areas in Ghana, there is still a lot of work to be done in rural electrification. Where this electrification were to be done through renewable energy, then this would absolutely be financeable through a green bond. And this could be done by the private sector, or even where you have an existing project that you've financed already, and you're looking to refinance the debt in the project, in the renewable energy project, you could do that through a green bond. So issue a green bond, refinance that debt, and release some equity and reduce your borrowing costs. So these are a few ideas around sort of what could be financed through a green bond in Ghana. We've tried to sort of think about the priority sectors, but we would really love to later on get feedback from yourselves on the alignment that you see perhaps between your own business or your own activities and some of these things, and very happy to take questions. Now I will pass you over to my colleague Ike Sime, who will take you through the rest of our presentation. Thank you.
Thanks, Gaia. Hope everyone can hear me.
We can hear you great.
Okay, great. Thanks. Okay, so we had we've kind of gone through like more of the sort of general and surrounding sort of situation, situation surrounding Africa and so on, and green bonds. And it's clear that it's something that is, I suppose you could say, picking up, for lack of a better term. Obviously, there's difference and nuance around certain countries. But in general, I think Africa is trending in the same direction as the rest of the world and the rest of its emerging market peers. Obviously, it'll take some time until you kind of get to the same level as some of the other large issuers. However, so the work starts with looking at specific countries, and obviously Ghana is no different, given that was the assignment we undertook. I think broadly it's quite understood that there is still a little way to go in terms of sensitization and sort of broader market adoption. And you could look at this on the side of demand or supply, where some might think that, well, if there was genuine demand, we'd see more green bonds. But I think the idea is that there is a bit of a sort of kind of latent demand that hasn't yet been captured. And it's the kind of thing where people need to sort of recognize the opportunities around that. I mean, so yes, to answer the question, there is absolutely demand. From speaking to asset managers, institutional investors, some regulators, etc., there is absolutely the desire to see green bonds being issued in Ghana. I think in general, the government has tried to promote a sort of climate-friendly environment. Gaia mentioned Ghana's NDCs a moment ago. And I think looking at it from that perspective, there is the sort of supportive foundation in that case. And from everything we understand from our discussions, there are also moves in pensions regulation to see how this can be more easily accommodated. But strictly speaking, when you look at investors and you say, okay, what they can do to support the sector, right? I think, and it is a bit of a sort of, you don't want to say necessarily chicken and egg, right? But it is kind of like that. You have investors that want to see different instruments in the space, in the wider capital markets and investment space. And, obviously you see a lot of the action around green bonds everywhere else. And so you want to see that in Ghana. And what we've sort of kind of learned and sort of discussed is that, investors should look to engage with companies that they already invest in, right? So it's just kind of saying, this is what I normally do, but actually, if I think about certain things this way, perhaps there's an opportunity to, do green bonds in this space. Now, again, we've kind of covered a lot of the broad sectors from an industry perspective that green bonds would work for. There are obviously some that kind of cancel themselves out given the general sort of idea towards climate friendliness. But absolutely, investors, should try and engage companies that they invest in, and also engage with, potential issuers, like I said, and also intermediaries that some we've identified around any concerns or preferences. And by that, you can reference, Nigeria, South Africa, and things like that, but you also have to make sure it's tailored to the local environment, i.e. Ghana, such that the adoption rate when they start being issued is more, I guess you could say, robust. Which then, says, okay, well, what's the benefits of sort of buying green, as it were? And again, there are a lot that you can think through, but in Ghana's case, I mean, you look at, well, you have climate hedged activities, and because, we all kind of want to do things that benefit the earth, especially because this is all we've got, that is definitely a key consideration. Vimal mentioned earlier greater transparency on the issuer's use of proceeds, but even just when you think through reporting, when you think through governance, the increased sort of, transparency around that, I guess, is it breeds more confidence basically in the market. And then, of course, like I said, regular reporting on progress, and it's the kind of thing where you can continue to track and just, have a more confidence in the environment. On the supply side, there is a lot of potential. We've spoken to a number of people who, like I said, they there is that thing where you could say, all right, what, if we just kind of think about how this can be applied, there's a lot of potential for issuance. There are a few that have started looking at their portfolios and activities in light of the guidelines and so on, just kind of to anticipate that eventual shift. But one key constraint is understanding that there will be bias. Nobody wants to bring a sort of lame duck issuance to the market. And I think, like I said, chicken and egg, but there is a bit of that iterative engagement with the market that can help smooth that path. And so in terms of what issuers can do, one of the key things that will really help is credit rating. And this was alluded to earlier when speaking about the different defaults that have occurred in the last few years. But if you think through the transparency and reporting sort of benefits and how it can help, encourage confidence, then you might find that it would be easier to convince investors to come aboard, which would make things, more straightforward for potential issuers. And then when you now start thinking about the wider applicability We talk a lot about green, but when you also think the wider applicability around social and how you're able to achieve sort of the investor considerations, around yield and governance transparency, but also from a use of proceeds perspective and how you're helping to actually develop the country or develop the local economies or whatnot. And really, issuers can work with advisors to better understand how to, they can issue a green bond in a successful manner. And on the supply side, I guess the benefits we would look at would be around investor diversification, attracting international DFIs into the structure, which again is sort of like a confidence boosting. I'm using the word confidence a lot, but really that's a lot of what this has to do with. It's a confidence boosting aspect to the structure and makes it, stronger in that respect. Obviously, there'll be greater engagement with existing investors, giving the reporting and transparency benefits, and then essentially you're climate proofing your business model to an extent. We mentioned green housing earlier. You think through sort of like a EDGE certification, which allows you to, basically achieve greater energy efficiencies, which is obviously a net positive when you think through carbon sort of emissions, which is essentially the goal. And sorry, next slide. And so that then leads to the obvious question of how do you sort of create that regulatory, conducive, regulatory environment. Like we said, the government has tried to push and promote a sort of mindset that pushes, that moves its way towards climate friendliness. But we've also seen that the view from the market to an extent, kind of looks more specifically to, or rather looks to specific guidelines that can come from the government. So that needs to be developed. Now, whether it's one sort of body versus another is up for debate. But I think that having dedicated guidance can help issuers and market operators sort of navigate this new product, which is what it would be. And given the reference points from a standards perspective that we've already mentioned, you could sort of adapt it to your model locally. So you could be more reliant on international standards, like maybe like South Africa, or then you could kind of like tailor them more like Nigeria. In Nigeria's case, the federal government issued the first green bond. In South Africa, there hasn't been sort of like the national green bond, but there've been a number of sort of like subnational or corporate green bonds. So it really just kind of depends, but it's something that can be done relatively well, with a lot of engagement, but it can be done. And then, of course, when you think about government support and incentives, again, the government could continue to take a leadership role in this and just continuing to engage the private sector. Some of the feedback we got just really just centered around that, the idea that some people knew about green bonds, most knew about green bonds, but some didn't know anything at all. And I think also the level of understanding around green bonds, and you almost want to say almost not like a fear, but a bit of a hesitancy, which really can be ascribed to the idea that you may not really be comfortable with what you don't know. So again, continuous sensitization. And, look, me being Nigerian, I'll use Nigeria as an example, but again, we've sort of continued to create that environment and create little initiatives around green bonds or climate friendly initiatives, et cetera, that allow us to sort of continue to push the message such that, it's led to a couple of private sector issuances. And I think the same can be done in Ghana. And then you can look at intermediaries that can provide leverage for the local market. And by this, what we simply just mean is, again, aspects or initiatives that can help strengthen the bond structures such that, again, more confidence in the issues, and that demand will be stronger. So you could consider enhancements such as first loss capital or partial credit guarantees. Again, so if it's an infrastructure type thing, but in Nigeria, what we have an entity called InfraCredit, which provides guarantees to particular infrastructure projects across various sectors. But essentially, what this helps to do is to to give investors that comfort. And the same thing can be explored here in Kenya as well. Guy mentioned ACON. Garanco also provided 50% partial credit guarantee to bond issuance as well. So that's a very effective sort of mechanism. But also you could think around things like some of the kinds of technical assistance that are provided by different bodies. I mean, our sister company manages the Africa Local Currency Bond Fund, and that has a TA facility that can be also leveraged that has been leveraged, excuse me. And so similar institutions or similar sort of initiatives can help in this case. And then you go to sort of training and capacity building, which kind of links to what I said earlier around sensitization. You just continue strengthening institutional capacity, maybe running workshops, partnering sort of inter-stakeholder sort of groups where you've got the capital markets, you've got maybe regulators, industry, sort of specific industry representatives, the government, and so on. And then again, these market intermediaries where you just continue to push the message and have people understand the aspects around green bonds, which leads back to the ultimate sort of conclusion where this is concerned: investor appetite. The ability to get a diversified set of instruments is attractive to any investor, irrespective of the market. And I think obviously green bonds is a good is a good one to have in your portfolio, and that's what people are looking for ultimately. One of the things that really should be understood, where green bonds are concerned, is that they actually carry no additional risk to regular bonds. And if this issue of ratings is addressed in Ghana, I think that would be even stronger and should be more attractive in that respect. We've gone over the transparency and the fact that you can help hedge portfolios against climate risk. And lastly, I think just, again, enhancing the structure and the credit quality, which, we've mentioned sort of, having guarantees and stuff in place, first loss capital. But again, this is just goes to the crux of it. It is a bond, but having a bond that is that has the right structure in place will make people more comfortable, and then the proceeds that it is used for will help drive sort of the green message, the green agenda, and so on. So let me stop there because I realize I've rambled and we're short on time, so I apologize. But thank you very much.
Thank you, Igosimo and Gaia, for that presentation. We'll now go straight to the questions and answers given the time. We have had many questions which have been submitted, so we can see how many we can take, but just a point of note is that some of these questions can be answered in the Africa Green Bond Toolkit, which FSD Africa developed and launched last year. So, and it is also available on our website. It gives a breakdown of the step-to-step process in terms of taxonomy, even in terms of the process of issuing green bonds and everything. So that will be a helpful guide in case some of the questions are not answered because of time. So I'll just go in the chronological order. One of the questions is, from experience and existence of different standards for green bonds, is there any preference by investors on certification of bonds, and is there a particular certification influence investor participation in any way? This is linked to the second question, which is comparing green bonds with vanilla. And the main question is it expensive, or are there savings to issue green bonds? So maybe I can take these two, and then I can pass the other to the other panelists. So the green bond issuance actually requires a certification to be done, because you have to verify the green assets. And once the assets which are going to go into the green bonds, they need to be verified as green. If they are not green as per the standards or the guidelines, then they cannot be included as part of the bond issuance. So I think the certification is one of the requirements for green bonds, although there are some guidelines which are in-country guidelines. Like for example, in Kenya, we have the Kenya Green Bond Guidelines. We have the same in Nigeria, but still those guidelines have to be followed in the same way for the issuance of a green bond. And are there any savings, or is it expensive compared to plain vanilla bond? I think anything you look at it from a green or ESG perspective will have overall savings. If you're talking in terms of savings from the yield basis, this will again depend on the rating and the investor appetite. So far globally, we have seen green bonds have been oversubscribed significantly. So the investor appetite is there. There's a lot of capital which is flowing into green bond transactions. So that will be one factor determining the price of the green bond, but also the underlying quality of the assets. The underlying quality of green assets will be a key factor on the pricing that you get on the green bond. So this is going to be purely what the issuer is going to include as the green underlying assets. So I'll now go through the next questions and maybe ask the rest of the panelists to assist. One of the questions is, in the feasibility study, did we engage with government to determine what incentives the government is prepared to offer to the private sector to encourage the issuance? And is there any minimum value of green projects that can be financed using green bonds? And is it for mainly public market or private market? So may I request, Kaya, if you can look at those questions?
Sure. So I think there's two are linked, right? So what's the minimum value, and is it a private or public market? And there's another question like that as well, and I just saw in the Q&A. So the minimum value depends on what the minimum bond size is in the market you operate in. So for example, if we look at South Africa, the vast majority of green bonds issued there have been around the 1 billion rand mark. But there's very much viability for green private placements. So that's definitely something we've been working with at Lion's Head. And so depending on what your business is like or what you're trying to finance, you may pick a listed instrument versus a private placement. Both can be done as green. It just requires you to specify what you're going to be using the proceeds on and draft this framework. And as Mamal said, get a second opinion. So get an independent entity to come in and say, hey, I've looked at this bond, I've looked at the framework. We think it's all in line with international standards. We're happy with it. You investors should be happy with this structure. So the answer is sort of flipped that on its head, and either you can do private placement or a listed instrument, depending on whether you have access to listing and how big your bond, your capital need is, what you're trying to raise. So both are viable. It's as we said, both sovereigns and private entities can issue. So there's a lot of sovereign issuers globally. Equally, there's a lot of corporations. Both can do this. And there are a few international investor funds that are looking at private placements for emerging markets as well. So that's encouraging for issuers across Africa, really. On the government side, there have been countries where an incentive has been given. So in Kenya, for example, there is a tax incentive for issuing green bonds, but to be clear, there is a tax incentive for any bond issuance. So It's not just for green, but certainly if the government wanted to provide additional motivation for issuing a green bond to the corporate space, then that could be something to for investors on green bonds. That is something that can be done. Absolutely. I think practical question, sorry, Vimal, around the cost of issuing a green bond, if you don't mind. I think that's something that a lot of people tend to want to know. So issuing a green bond is the same as issuing a normal bond, apart from you have to invest some internal resources in drafting the framework. So you need to identify internally, you as the issuer need to identify what it is that you want to finance through the green bond, and then work with an advisor or yourselves on a framework. So drafting this document. As I said, the document doesn't need to be very long, but it does need to be clear, and it does need to align with international standards. So green bond principles, climate bond standards. You pick which, essentially, and then you need to get a second party opinion. So depending on that, there could be additional costs associated with it. So if you want to work with an advisor, you might have to pay a fee to them to help you put the bond together. And then the second party opinion is usually in the sort of very broad range of sort of $7,000 to $30,000, depending on who your provider is and how complex the bond you're putting together is. So if you are a renewable energy company and you're issuing a bond to finance a solar plant, and that's it, that's very straightforward. The framework will be very straightforward, and the second party opinion will be very straightforward. If you are a bank and you're looking to finance a very wide array of green eligible activities, so for example, you want to offer green mortgages, but you also want to lend to renewable energy projects, but you're also financing, I don't know, a sustainable agriculture company, then that will require a little bit more complexity, and that may drive the cost for the second opinion or some advisory up a little bit. But it is, in the scheme of bond issuance, it is not a significant cost. Sorry, Vimal, back to you.
Thank you very much, Gaia. So I'll just take through a few more questions. One of the questions was some of the incentives that the government provide. I'll just give an example of Kenya. So the Kenyan government passed in the finance bill a withholding tax exemption for the green bonds. That is the only country in the world globally that has such an incentive which has been passed. So there are various incentives that can be looked into. One of the question is, how long does the certification take? This one depends pretty much on the issuer, how ready the information is. But on our transactions that we have provided technical assistance, it can range anything between 1 to 2 months, as long as all the information is ready, and the green bond framework, which Gaia and Ego mentioned, is also ready. So there's another question. I think on the pricing we've answered. This is on the Ghanaian market, whether we mentioned that Ghana needs about 26 billion cedis to implement the green agenda. If there's any study to ascertain how the emissions, as far as I'm aware, there is no information that gives on how much emissions or households contribute to the total global emissions, specifically to Ghana. I don't think the country has undertaken any similar study, so we don't have that information. There's a question also related to Nigeria here, to Access Bank, when they did a refinancing of the portfolio, whether the green bond was used to refinance its portfolio, and is this that typical that people do when they are issuing green bonds, and are there any benefits listed for buying or issuing green bonds? So maybe I can ask Ego to take a shot of that. Maybe that will be the last set of questions before we do our closing remarks. So Ego, over to you.
Yeah, thank you, Vimal. No, I mean, good question. Look, from what we understand, right, the bond was to work to sort of add to protection around flood defenses, to bolster flood defenses at Echo Atlantic, and to go towards some of which to go towards solar energy facilities. Now, that is something that we've seen quite a lot in Nigeria, where everything runs on diesel power. So a lot of banks and their branches have essentially tried to switch towards more of renewable energy, or some sort of a part-time solar, where they can run the bulk of, let's say, the ATMs and their critical infrastructure, maybe off peak, and then you use diesel during the day. But the whole idea is that you again reduce emissions. In terms of, I'm sorry, I think I need to look at the rest of the question, but that was, yeah. So on price, I think we touched on it earlier. I think it's difficult to say that, okay, there will definitely be a price benefit, because there's just so many factors that go into that, right? Again, a green bond is a regular bond, and in terms of how it functions, right? And so it is subject to market pricing and when you issue. So in that respect, you can see some benefits. Now, to the extent that there are some sort of, and this is also, if you should also have to look at it from the issuer side or the investor side, but to the extent that there are some level of credit enhancements put in place, then maybe you might see some benefits. But it is honestly a case-by-case basis as different countries are concerned. So it's not a sort of like, blanket one-size-fits-all. You will get some pricing benefits. I don't know if that is helpful, but Vimal, is there more?
Thank you very much, Igor. I think we will now request Reverend Daniel Baratete, the Director General at SEC Ghana, to give us a closing remarks for this webinar and his thoughts on the green bond market development in Ghana. So Daniel, over to you, please. Hi, Daniel, are you there? Can you hear me?
Okay, my mic was off.
No problem.
Okay, thank you. So thank you, Vimal, and greetings to everyone who is on the call. I believe we've had an insightful and lively discussion, and I do not intend to be long in my remarks. But probably, if it's at all possible, we can give an applause to facilitators, Gaia and then Igosime, for their excellent presentation and then their responses during the Q&A. And I thank you also to all the participants who have taken the time to be part of this webinar. In 2007, under the auspices of the World Bank, the European Investment Bank issued the first green bond, which connected investors to support climate solutions through safe investment without giving up financial returns. Momentum is rapidly building for the global green bond market, which, as estimated by Banco Bilbao, BBVA Global Markets Research, is approaching 1 trillion. That's equivalent to 0.86% of total bonds in circulation. This market, as we all know, is a crucial source for financing projects, particularly projects with positive environmental impact in both developed and emerging countries. As hinted in the presentation earlier on, Nigeria had the issuance of their sovereign bond in 2017, and we've also noted activity in South Africa and Kenya as well. And clearly, it's more imperative for Ghana or the capital market in Ghana in particular to position itself to also take advantage of a green bond. And we are happy that with the support of FSD Africa, we will be able to make progress with regard to the green bond markets in Ghana. Let me also say that we've had some conversations over the last few years on how to deepen or how to develop the fixed income market in Ghana, particularly the bond market. Currently in Ghana, the government is the largest issuer of bonds, and we have the corporate sector also in there, just that we have just around 10 issuers of corporate bonds on our market. With the support of FSD Africa, we concluded a diagnostic study of the bond markets in Ghana with the goal of deepening the bond market in Ghana. And one of the initiatives that we'll be pursuing following this diagnostic study is developing the green bond markets in Ghana. Indeed, the recently completed Capital Market Master Plan, which is due to be launched soon, captures the initiative of developing a green bond market in Ghana. And I can confirm to you that this year, at the Commission, we are committed to developing the regulatory framework for green bond issuance in Ghana. There's no doubt that significant opportunities for the issuance of green bonds issuance abound here in Ghana. And I think Igosime highlighted that quite clearly in his presentation. Needless to say, we are in the sustainable investment age where environmental, social, and governance factors are assuming an increasing importance in investment decisions. There are many benefits of developing the green bond market in Ghana, but I'll just highlight a couple of them from the perspective of the market. One is the element of detailed impact reporting and greater transparency, which translates into better governance and accountability. I think this is important, as in Ghana, we've had a couple of unfortunate instances on the bond market, bordering on some degree of default or delay. But, the element of the detailed reporting, the greater transparency, we believe that will bode well for all investors on the market. And the second benefit, which I think Igosime also highlighted in his presentation, is the element of diversifying the investor base. And again, if you look at our capital market master plan, one of the pillars that we have in the capital market master plan is diversifying or increasing the investor base. And we know that there is appetite for green bonds by a growing class of investors. So that gives that assurance or that comfort that once we are able to put in place the framework, we will be on our way to diversifying the investor base. The SEC, as the apex regulator of the market, the capital market, in collaboration with partners and stakeholders, is working towards pushing the agenda of the green bonds. This webinar for sharing insights from the feasibility study and educating participants on green bonds by the FSD, a key partner of the SEC, is all part of the efforts that we are making towards developing the green bond market in Ghana. And it underscores our support for this initiative. This feasibility study has thrown light on some critical issues and teased out discussion points on which active engagements with key stakeholders must be centered if Ghana is to move ahead with this opportunity of deepening or developing the green bond market. I have no doubt that this conversation will continue long after this webinar. I would hope that the ensuing discussions will take into consideration the ingredients required for implementing or achieving a successful green bond market and how we can all play our respective roles to make that a reality. We at the SEC are confident that all the players in the ecosystem would act in concert to pull off the initiative of developing green bond issuance in Ghana. So we're looking forward to a win-win situation from this green bond issuance initiative. As a result of all these engagements, we are looking forward to a win for issuers, a win for investors, a win for the regulator and other collaborators, and ultimately a win for Ghana. So I'm quite positive and I'm very happy, and I believe that we all would continue to stand together as we make this initiative of developing the green bond market in Ghana a reality. So I look forward to subsequent engagement and importantly, action, concerted action that we would all take to make this a reality. So thank you very much for your attention, and over to you, Vimal.
Thank you very much, Daniel, for those fabulous closing remarks. I would also like to thank all the panelists, Gaia Igosome and Reverend Daniel Tete, for their time, and all the attendees who've joined this webinar. We hope that it was quite helpful. And I would like to end by saying that let's make Ghana's capital markets develop and it be the next country to issue the green bond. Thank you very much.
Thank you. Thank you. Thank you, everybody. Great.
Thank you. Thank you. Bye-bye.
Bye.